Welcome back to BitcoinDorks, your daily source for cryptocurrency markets and news. Today, we're diving into the recent turbulence surrounding Ethereum's price as the Securities and Exchange Commission, SEC, decision regarding an ETF looms on the horizon. Ethereum, the second largest cryptocurrency by market capitalization, has been experiencing fluctuations in its price amidst speculation and anticipation surrounding the SEC's upcoming ruling. The SEC's decision regarding the approval of an Ethereum exchange-traded fund, ETF, has become a focal point for many investors and market participants. An ETF could potentially open up new avenues for institutional investment in Ethereum, leading to increased liquidity and possibly driving up the price. However, the uncertainty surrounding the SEC's stance has contributed to market volatility, causing Ethereum's price to experience fluctuations in recent days. The anticipation surrounding the possibility of an Ethereum exchange-traded fund, ETF, has sparked considerable excitement and debate within the cryptocurrency community. An Ethereum ETF could represent a significant milestone for Ethereum and the broader cryptocurrency market, as it would provide investors with a more accessible and regulated way to gain exposure to the digital asset. Proponents of an Ethereum ETF argue that it could open the floodgates for institutional capital, as many institutional investors are currently unable or unwilling to invest directly in cryptocurrencies due to regulatory constraints or risk aversion. By offering a regulated investment vehicle backed by Ethereum, an ETF could attract a new wave of institutional investors seeking exposure to the potential upside of the cryptocurrency market. An Ethereum ETF could help to legitimize Ethereum and cryptocurrencies as an asset class in the eyes of mainstream investors and financial institutions. As more traditional investors gain exposure to Ethereum through an ETF, it could lead to increased acceptance and adoption of cryptocurrencies as a legitimate investment option. This mainstream acceptance could drive further demand for Ethereum and other cryptocurrencies, potentially leading to higher prices over the long term. However, skeptics of Ethereum ETFs raise concerns about the potential risks and challenges associated with such investment vehicles. One of the primary concerns is the regulatory uncertainty surrounding cryptocurrencies, particularly in the United States, where regulators have yet to approve a Bitcoin ETF despite numerous applications. Regulatory approval for an Ethereum ETF could prove challenging, as regulators may have concerns about market manipulation, investor protection, and the potential for fraud or abuse in the cryptocurrency market. There are concerns about the potential impact of an Ethereum ETF on the underlying cryptocurrency market. Some critics worry that an influx of institutional capital through an ETF could lead to increased price volatility and market manipulation, as seen in other asset classes such as gold and silver. Additionally, the creation of an Ethereum ETF could attract speculative traders and short-term investors looking to capitalize on price movements, potentially distorting the market and undermining its integrity. The transition to Ethereum 2.0 represents a significant milestone for the Ethereum network and its ecosystem. Ethereum 2.0, also known as ETH2 or Serenity, is an ambitious upgrade designed to address some of the scalability and energy consumption issues plaguing the current Ethereum blockchain. One of the key goals of Ethereum 2.0 is to improve the network's scalability by transitioning from a proof-of-work (POW) to a proof-of-stake (POS) consensus mechanism. This transition will enable Ethereum to process a significantly higher number of transactions per second, making it more scalable and efficient for decentralized applications, DApps, and smart contracts. The move to a POS consensus mechanism is expected to reduce Ethereum's energy consumption dramatically, as it eliminates the need for miners to solve complex cryptographic puzzles to validate transactions. Instead of miners competing to solve these puzzles and consume vast amounts of computational power, Ethereum 2.0 validators will be selected to create new blocks and validate transactions based on the amount of Ether they hold and are willing to stake as collateral. This transition to a more energy-efficient consensus mechanism aligns with growing concerns about the environmental impact of blockchain technology and positions Ethereum as a more sustainable alternative to traditional proof-of-work blockchains like Bitcoin. In addition, one of the most anticipated features of Ethereum 2.0 is the implementation of shard chains, which are smaller chains that run in parallel to the main Ethereum chain and enable greater transaction throughput. Shard chains allow Ethereum to process transactions in parallel, significantly increasing the network's capacity and reducing congestion. Another key aspect of Ethereum 2.0 is the introduction of a new virtual machine called UASM Ethereum WebAssembly, which will replace the existing Ethereum Virtual Machine, EVM. UASM is designed to improve the performance and flexibility of smart contracts by enabling developers to write code in a wider range of programming languages and compile it to run efficiently on the Ethereum network. This transition to UASM is expected to open up new possibilities for developers and enable the creation of more complex and powerful decentralized applications. Ethereum 2.0 introduces improvements to the network's security and governance mechanisms, including the implementation of a new slashing mechanism to penalize validators who attempt to manipulate the network or act maliciously. This mechanism helps to ensure the integrity and reliability of the Ethereum network by discouraging malicious behavior and incentivizing validators to act honestly and responsibly. As the crypto market continues to evolve and mature, regulatory clarity will play a crucial role in shaping Ethereum's future trajectory. A favorable decision from the SEC regarding an Ethereum ETF could provide a significant boost to the market, instilling confidence among investors and paving the way for further adoption. Conversely, a negative ruling could lead to short-term price volatility and uncertainty as market participants reassess their positions. In conclusion, Ethereum's price has been affected by various factors, including speculation surrounding the SEC's decision on an ETF, broader market dynamics, and network developments. While short-term price movements may be influenced by market sentiment and external events, the long-term outlook for Ethereum remains positive, driven by its technological innovation and growing adoption. As investors await the SEC's decision, all eyes are on Ethereum and its potential to reshape the future of finance. Thank you for joining us today.